Well, as we mentioned earlier in the broadcast, right at our open today, we were talking about the overnight session and the fact that Chicago has changed their trading limits on wheat. In Chicago and Kansas City, wheat, they bumped it on out to 85 cents. And I believe that is now the normal limit on the wheat, and it could expand further from there, I believe. Here to talk about it, I've invited in Brian Hoops, and he's with Midwest Market Solutions. He's in Springfield, Missouri. So what is the situation on the wheat limits today?
Yeah, good morning, Marlon. They did expand limits over the weekend. So now instead of 50 cents, it has moved out to 85 cents, and that's where we traded limit last night for Chicago. The expanded limits will be $1.35, I believe, a bushel. So that goes into effect if we close the limit up today. We could see those expanded limits in play tonight and tomorrow, and that should allow the wheat market to begin to trade. It's been too long since the traders have been able to get out of those short positions, whether you're a hedger or a speculator that's caught short. It's time to allow these people to trade and get the market back to its free moving system. So it should allow this to happen here very soon. And, the wheat market has definitely priced itself out of any export business on the world basis. That was kind of the thought on the original part of this rally was it'll open up the opportunity for the U.S. to export some wheat. That opportunity, I think, is gone now with this parabolic rally that we've seen in wheat, a $3.50 move last week alone. We're just not going to be competitively priced, I'm afraid.
Well, I believe you were explaining last week, if you look at that May contract on Chicago wheat here, 85 cents higher, the new limit overnight, and it didn't even trade. Again, the high and low and last are all the same, so that means no transactions even really transpired. So I guess in a way that's kind of a way to compromise. Some analysts last week were saying, I wish we didn't have any limits so we could actually get true market discovery, as you needed. Some markets are that way. But instead of keeping the limits as they were, they did at least raise them to pretty lofty levels, but the margins went up along with it, right?
Yeah, margins have gone up along with the wheat market, and pretty much everything. The margins are increasing dramatically. It's wheat's more than soybeans, which is pretty abnormal. But soybean market is pretty expensive to trade as well right now, and that's due to the heightened volatility and that we're seeing across the board for all of these markets, including the energies as well. So it's a real unprecedented time frame that we're in. But I do agree that we should have expanded these limits even further or even sooner. They should have some safeguards in place that if we do lock limit for a couple of days, they expand again. We have that in some markets, but not in the wheat, and that needs to be put in place because this wheat market, it's just been lock limit for too long. It's spilled over into a lot of the other markets. We put a lot of air into some of these markets, and corn, I think we talked last Friday, it's really not a fundamental direction on the front months any longer. The elevators, end users, merchandisers rolling their bids out to July instead of the May contract because they're just full of product right now. The market's still telling you to sell the product, but these merchandisers don't have room for it. We just don't have enough demand to meet the supplies that we have, and that is causing basis levels to widen back out.
Now, I do have a new news item this morning from USDA. We had another overnight export sale to report. It was, of course, over the weekend. This time, surprise, it was soybeans. And again, surprise, the buyer was China and their usual amount, 132,000 tons. This time they divided it in half of it for current marketing year delivery and half of it for a year out. So that is their kind of new MO here over the last week now. Let's take a look at the overnight trade. Corn for a while in the overnight session was over 20 cents higher, but it finished up only 2 1/4 higher at 756.5. On these quotes provided by Bar Chart, you had May soybeans only 5 3/4 higher when we wrapped up at 1666 1/4. That was 30 cents off of its overnight high. Now, as Brian mentioned, we had the Chicago May, the new limit higher, 85 cents higher, didn't even trade. Kansas City wheat also touched that new limit. It was 85 cents higher. It closed 65.5 higher overnight, so keep an eye on that. Maybe that new expanded limit worked there. Spring wheat, he had the May 48 cents higher at 11.95. By the way, spring wheat still has a limit of 60 cents. We'll come back and we'll take a look at the livestock trade and how's it going to act amidst all this. We'll discuss when we come back. Well, you probably heard overnight we had the crude oil, West Texas crude, surging ahead in the overnight trade. It actually went over $130 per barrel overnight. Finished up at 116.10 per barrel, so it was 67 cents higher at the last check here. So it gave up a lot of ground after an early surge, kind of similar to what happened in the corn and soybean trade, where they came off of their highs. That was probably around 6 o'clock Central Time this morning when they faded away. The Dow, the March futures, down 59 points right now at 33,519, but it had been down below 33,000 for a while, so it has come back about 600 points already. Craziness in that market. U.S. dollar index up 114 points at 98.785 right now. Now, when we finished last week, we had live cattle showing April 257 lower at 135.77 rather. The first two contracts over $2 lower. And heading into the weekend, we had the April feeder cattle down 327 at 157.25, just all kinds of pressure on the cattle market. And lean hogs, look at that. They were limit down with the April down 475. We had May and June also down 475. So what does that mean for their limits today, Brian?
Yeah, they'll have expanded limits as well today. So hogs will be expanded, so they should be able to trade. And, we're hoping the same thing happens in the wheat market as we were talking earlier. Things look much different at 8 o'clock this morning versus 8 o'clock last night. So, things will change as the day goes on. And certainly if that wheat is able to trade, I think it'll change dramatically how the grain markets are trading. But right now, the cattle market is expected to come under a little bit of additional selling pressure after poor technical close on a Friday and higher, just slightly higher corn prices overnight. Really probably won't put a lot of pressure against the feeder cattle market. We may have another week of these bigger supplies to kind of work through, but then we should be able to work through some of that and maybe get this cash market to rebound into the end of the month of March.
Yeah, on the livestock summary, we had just a little bit of a cleanup trade on Friday, and the market was a little bit weaker than it had been during the course of the week. But as I mentioned, the volume was not very heavy. We'll see what develops this week. We'll be developing show lists for the first day or two. Well, Brian, thank you for the time. Always good to visit. Brian Hoops, Midwest Market Solutions. So on a Monday, we're about ready to kick this thing off, Janet. We'll get them rolling at the bottom of the hour.